Right now, across America, there is a $1.5 trillion time bomb sitting in people's driveways, and in 2026, it is detonating. These massive, overflowing impound lots represent a surge in subprime defaults as inflation eats into middle-class paychecks. Banking institutions are preparing for these defaults to ripple through the broader financial system by 2026. To protect your credit and your savings, you need to execute a 3-step survival plan before the bubble bursts. Grab your current auto loan statement, your insurance policy, and an online valuation tool like Kelley Blue Book. Addressing these terms now stabilizes your household budget before market instability makes debt restructuring impossible. Dealers marked up cars by thousands of dollars over MSRP during the 2023 inventory shortage. They hid markups by stretching 5-year loans into 8-year contracts. At 9% interest, a $45,000 principal balloons into a $60,000 payout. This creates the underwater trap. After 2 years, you owe $38,000 on a car the market values at just $25,000. These loans act as a mathematical anchor, keeping you indebted to a rapidly depreciating asset. A sudden, catastrophic accident out of nowhere can instantly turn this hidden depreciation trap into an absolute financial catastrophe. Standard insurance only pays market value. If you owe $38,000, but the car is worth $25,000, you are responsible for the $13,000 deficit. Guaranteed Asset Protection, or GAP insurance, covers this specific difference so you don't pay for a car you no longer have. Review your policy right now. If your loan balance is higher than your car's market value, add GAP coverage immediately. Securing this coverage prevents a single fender bender from triggering immediate debt collection. Dealerships prioritize high-interest bank loans because banks pay them direct kickbacks for pushing higher rates. You can bypass this ecosystem entirely by moving your loan to a local, member-owned credit union. Dropping an interest rate from 9% to 6% saves thousands of dollars in interest while increasing the speed of your principal payoff. If your credit improved since buying the car, use an online calculator to find local refinancing options. Refinancing shortens your time spent in negative equity. When a monthly payment becomes impossible to sustain, you must act before the repossession truck arrives. Banks sell seized cars at auction for pennies, then garnish your wages for the remaining balance while destroying your credit for 7 years. Avoid this by selling the vehicle independently to a major online buying service for an instant cash offer. You will likely need a small personal loan to cover the gap between that sale price and your total debt. Trading a car loan for a smaller personal loan protects your access to housing and employment by keeping the repossession off your record. You have audited your equity, secured your gap shield, and finalized a plan to refinance or sell. These steps insulate your savings from the coming volatility in the auto market. You have replaced a cycle of passive payments with a specific strategy that you control. The system relies on borrowers who do nothing. If you want to see the trap currently being set for the housing market, subscribe. Stay sharp.